I have an important question for you for this video. If your clients had something in their mind that they were not impressed about with your work, would you want to know? Honestly, would you want to know the truth? I'm going to cover something in this video that we talk about a lot, but I wonder in my own mind because I'm a financial advisor. I do these videos for high-end retail financial advisors. If you're a financial advisor that serves affluent families, multimillionaires, and it doesn't matter what area of finance you're in, you could be certified financial planner, you could be a money manager, investment manager, you could be tax partner at a tax firm and you do tax planning, or you could be a board certified estate planning attorney and you're creating estate plans. The question would be the same. If there was something about your work that clients quietly criticized, that they were not impressed with, would you want to know? It's a good question because it reminds me of the movie with Jack Nicholson, A Few Good Men. If you've ever seen that movie, he's up on the stand in a court trial and he's being cross-examined and the prosecutor gets him all worked up. And at some point he breaks and he says, "You can't handle the truth." He's telling, in essence, the prosecutor that the truth is just too hard to hear. You couldn't handle it. I'm asking you point blank, can you handle the truth? The reason I ask is because for 25 years, I've been conducting important research with affluent ideal clients, what they expect from the relationship with their high-end financial advisor. Depends on what you're doing as to what you charge. Most advisors charge anywhere from $25,000 to $55,000 per family per year. Alternately, maybe you charge a percentage of assets under management. Maybe your fee falls into that line. It really doesn't matter. But the point is the same. If a client was not happy with the work, but they weren't precisely telling you, would you want to know what the issue is? Because the data is very clear. What clients expect is different from what advisors in our industry are delivering to them. Or if I were to say it another way, when the client hired the advisor, they had something in mind. At the beginning of the relationship, the advisor promised some things to the client. We all do this at every firm. You sit down with a potential client, you talk about what they're looking for or what the situation is, the reason they came in to talk business with you. Long story short, at the end of the meeting, you made a series of commitments or promises to which the client says, "Great, you're hired." All I'm saying is that what the client had in mind in that moment when they chose you over all other firms that they could have hired. In the case of affluent ideal clients, this is the market that I focus on. This is the market that I'm interested in. These are multimillionaires. These are people that have choices. They could hire from among a lot of firms. Most of these clients could hire whoever they wanted. They chose you. That's because whatever happened in that first meeting or those initial meetings where you sat down with the client and you were figuring out their situation, whatever you said, the client had something in their mind and they chose you. What if, as the relationship unfolds, what you actually delivered is disconnected from what they were hoping when they hired you? Would you want to know? I think it's important. I recently did a study of advisors. In addition to researching clients and what they're thinking and feeling, I'm primarily looking for research around what clients are willing to pay the most for. Put another way, if they're going to pay a high-end advisor, if the client's going to part with their money and pay you, what is it that they're willing to part with their money and pay you for? That's what I've been obsessed about for 25 years because I'm a financial advisor. I wanted to know. Turns out a lot of advisors are interested in this research of mine because my experience is most financial advisors, obviously not every financial advisor, but most financial advisors, and I've known a lot, thousands over the last 25 years, most financial advisors, their heart's in the right place. They're trying to do a great job for their clients. They want to make a difference. They want their value to exceed what they're charging to their clients. For that, I commend our industry. I commend the vast majority of advisors that I interact with. I would just say my hat's off to advisors who do care, who want to identify what clients actually wanted from them at the point they were hired, and they work very hard to figure out how to deliver on the promises that they made, especially at the beginning of the relationship. On the advisor side, I'm always interested in what are the struggles? What is it that advisors are seeing that are obstacles to acquiring clients, increasing referrals from their existing clients? The one measure of client satisfaction that is the best measure. As a matter of fact, I would make a case it's the only really relevant measure, in that if a buyer comes in and values your firm, and we're just looking at what's the value of your firm, the one measure that you can't fake, you can't spin, and you can't give an opinion about, it's client referrals. The one lagging indicator of client satisfaction that matters most when you're valuing a firm, and there's lots of valuation metrics. When I sit down and I look at a firm, I'm in the market. I will buy a firm if it has ample scale and if it's got a book of ideal clients that I could take over and manage that book and bring the level of service up to an even higher standard. Yeah, I'm in the market. But because I view this business both as a seller and a buyer, I've sold financial advisory firms that I've built, and I've purchased financial advisory firms. I view it from both perspectives. And when you're valuing a firm, you have to think like a buyer. If as a business owner, despite what you ever plan to do ultimately with your business, you may plan to never sell your business. You may be planning to hand it down to an employee that works with you right now, or maybe one of your kids, somebody in your family. It really doesn't matter to me what the succession plan is. It's all good. But from a business valuation perspective, I really respect business owners who on an annual basis are interested in year over year just increasing the value of their business. One important critical metrics in the value of a business is client satisfaction. It's one of the three primary metrics in the valuing of a business. Client satisfaction is hard to measure, and there are a lot of ways to measure client satisfaction, but the one that you can't fake, you can't spin, you can't say over time that it was just an accident, is the annual client referral rate. The first thing I have advisors do, just as a side note, if you're not measuring the annual client referral rate, that's something you need to fix immediately. Because if you are valuing your firm, even just for your own satisfaction, to confirm year over year that you're growing and that your business is worth more year over year, for years, this metric is a critical one to measure. It's very simple. You just take the number of referrals that you've received from clients over the last 12 months and you divide it by the number of clients. If you have 35 clients and you received 35 referrals over the last 12 months, your annual client referral rate is 1. You've received, on average, 1 referral for every client. On average. The reality is there are clients who will never refer you to anyone. It's just the way that they are. And there are some clients that just refer only occasionally. That's the reality. But the average is unaffected. If you have 20% of your clients, like a small percentage of your clients who do refer, 20% of your clients will refer 80% of your referrals over time. And if you're tracking it, and if you have an average client referral rate of at least 1, on average, you're getting 1 referral for every client, even though just 20% of your clients are providing referrals. The fact that you're tracking that and it's increasing year over year, may not be increasing dramatically, but the fact that it is increasing at all increases the value of your business more than you realize. The point is, what drives client referrals? It's exceeding client expectations. Back to the question, if you were doing something, forget meeting their expectations, it's below their minimum standards. They had something in their mind that they thought the relationship was going to provide them, and if there was something that missed that mark and somehow, some way you were disappointing them or irritating them or not fulfilling on your promises, in their mind, would you want to know? I think that's the purpose of this video. Some advisors don't want to know. I want to focus on advisors who do want to know. If you do want to know, you're on the right track. The fact that you care enough that you're meeting the expectations of your clients, because once you're meeting the expectations, only then can you exceed your expectations of your clients. And once you're exceeding your clients' expectations on a consistent basis, all of a sudden your client referral rate begins rising. To see that annual client referral rate increasing, not just 1 year, but wow, 2 years in a row. Wow, 3 years in a row. If you were to keep on that roll and do that 5, 10 years consistently, that's a business that's worth more. My recommendation to you is, if you care about meeting your clients' expectations, if you want to know the truth, if you can handle the truth and you want to know the truth, don't expect that your clients are going to volunteer this. The other part of this data that is interesting, but I would say maybe a little troubling, is that it's consistent across multimillionaires. They don't necessarily share their disappointments. They just assume that all firms are disappointing, and whether it's they just don't want the trouble of having to change to another firm and move all their assets or whatever's involved in firing you and hiring another whatever you do. It's a hassle, but there is one fix that is guaranteed to work. Ask them. By asking clients, how am I doing? Scale of 1 to 10. When you first came in and we worked together, you chose me over all the other firms that you could have hired. We're honored that you chose us, and we want to exceed your expectations. So scale 1 to 10. How we do it? The client will give you a number. They might give you a 9. They might give you an 8. But whatever it is, your single follow-up question is, great, what would we have to do to take it from an 8 to a 10? If we're sitting here a year from now and we moved from an 8 to a 10, walk me through it. What did we do for you that we're not doing right now? If you want to know the truth, ask. Sit down with every client, especially your top clients. Do it this week. Call them on the phone. Have this quick conversation and document it. Whatever they say, whatever they explain to you would take what you're doing now and move it to a higher level. Document it in the client file. Share what they say with everybody on your team. If you have an assistant, share it with your assistant. If you have a more extensive team, share it with everyone on the team. Then every time the client comes in, do some form of a report card. Let them know that this is not just a once and done question. It's not like they deal with other companies that send out a client satisfaction survey. They spend all this time answering the survey, and then they never hear anything from the company about that ever again, and they notice no improvements. If you're going to do what I'm saying, if you care what they think, if you want to know the truth, ask them, but then take action and follow it up in subsequent meetings. Have a report card. I recommend every time you sit down with the client for a formal client progress meeting, however many times a year you meet with the client, at the end of the meeting, make that the routine. Scale of 1 to 10. How we doing? If you move from an 8 to a 9 with a client, or my gosh, let's say you have a fussy client that's just very irritable and, in your opinion, very hard to please, and they say, well, you're a 6 out of 10. In other words, you don't suck, so I'm not firing you. Okay, what would it take to move from a 6 to a 10? So they tell you. Some of that may be completely unreasonable, and you need to set some ground rules, and you need to explain that you've hired us to do this, and we could do all that other stuff if you were willing to pay $60,000 per year. But given what you're paying right now, what can we do to move you from a 6 to a 10? And just follow up in subsequent meetings. Ask them, have we moved up in score? Yes, now you're a 7. Great, I moved from a 6 to a 7. What would it take to move from a 7 to a 10? Heck, what would it take to move from a 7 to an 8? You can have fun with it with the clients, but the point is they know you care. That most firms don't care. Most firms might care, but they don't want to hear the truth. They've got their processes all set and dialed in. They do what they do, in their opinion, very well, at least as far as they know. And to make changes would be painful. They just would prefer not to know what the client wants in addition to what you're doing right now, because that might mean more effort. And then that would require doing more for the client for the same amount of fee. I'm not saying that. I'm saying ask the question. You can always set the ground rules. You can always remind them of what it is that you do so that it's within the fee range that you've agreed with them. But I'll leave you with this thought. What if what they expect to take the relationship from wherever it is now to a 10, what if it includes doing things that you could do, but you don't do, and you wouldn't be willing to do for that fee? This is what we did. That's interesting. Thanks for sharing that. I did not know that you expected this. And I explained that for the current fee, here's what we do. But if this is what you really want, we could do that for you. And I'd be happy to work with my team and come up with an adjustment in the fee so that's included. What if you could get double the fee from the same client? No new client acquisition, just an increase in fee based on your skillful line of questioning, exposing and identifying something that they expect that you were never aware of, that you could do, but it's not covered by the current arrangement. Would you want to know? What's possible is you could double the revenue of your firm in the next 2 to 3 years, not adding a single client, but by just simply going through this process of sitting down with clients and understanding more clearly what they expect, how you're doing against that currently, and what more you could be doing that they would really like to see you doing. If it's something that you could easily do and it's covered by your current fee and you were just unaware that was the way the client wanted things, great, it's a win. Take the win. But if the client identifies something that your team is perfectly capable of and the client's willing to pay more to get that done, are you willing to explore the conversation and increase your fees without increasing another client count? I hope that's something to think about. I hope you want to know the truth, and I'm here to help. I would love to know if the situation is something that I could help you with. Explore this line of thinking further, because this is not only a skill, but the idea of identifying services that you're not currently doing and actually delivering on those things with ample profit margin is something that really you should be looking at, and it's an opportunity just sitting there waiting for you with your existing clients. Parting shot point on this. Did you realize that 20% of your clients, the 20% that actually possess 80% of the wealth of all your clients, that 20% of clients would be willing to pay 4 times whatever they're paying you right now? They could afford it. They've got the money to do it. The question is, do you know what more you could be doing? And could you arrange your services to be able to be receiving a higher amount of revenue from that client without adding a single new client? Something to think about. And we'll see you in the next video.